years. I've been specializing in property developments for the last 22 years. Yeah, we're in very interesting times with the current corona crisis all over the world. So it's, yeah, a very interesting time. So I thought today take a little bit of time and unpacking what's been happening in the property market. Just starting out, obviously I don't have a crystal ball, so whatever happens over the next couple of weeks and months will change the effects if we get locked down further. But right now I can give you up to this point what the market has been doing in Cape Town and in South Africa. So today's topics I'm going to cover is the property market in general in South Africa and Cape Town, who's buying and why, the future outlook of property. For first-time home buyers, everyone's goal is to own their own property. So, we're going to talk about buying rather than renting. And then are the banks still lending? And then a property as an investment versus other investments. So I'm going to really unpack it. I'm going to try and keep it as simple as possible, but really the stats is what is crucial on what's been happening. Relative excellence, we cover the different segments of the market: residential property, commercial property, new developments, rentals, leisure, offshore, and property administration. And this is a beautiful image of Sunset Links, Milnerton, absolutely beautiful estate. So a lot of people have got in mind, Tony, what's happening in the market? So firstly, some of the good news is with the inflation rate that's been down and petrol price coming down, we've had interest rates decrease over the last year. And at the end of the day, last month we had a 1% decrease in interest rates. And I always love comparing, a lot of people say our interest rates are high. Yes, our interest rates are high compared to Europe. But if you look at, Italy, France, United Kingdom, they're all sitting at around 1%, but also they don't have a lot of growth. So big element is for us, we're sitting at the moment, interest rate of 8.75. If you look at other countries, Brazil, 46%, which is just huge. But Australia, 7.9, Singapore, 5. If you look at United States, 3.8% on your averages. So we're not extremely high, and hopefully we will get another interest rate cut or 0.5% over the next coming months. So from an interest rate point of view, South Africa is not bad at all. It has, and it will help the market in today's current times with COVID. Obviously, businesses at this moment in lockdown, but things will change. I think as the lockdown opens up and businesses start operating, it will start feeding into the market. Then if you look at Cape Town, one of the biggest fundamental drivers of real estate is population growth. So if you look at Cape Town, we've got around 4.6 million people in Cape Town. Our growth has been close to 30% over the last 15 years. And there's some really exciting things that's happening in the property industry. So property is always a long-term investment. It's not a short-term investment. So if you take it over the long term, what is property actually doing? So at the moment, in today's current South African price inflation index, you're looking at properties will increase on an average of around 2.9% plus. Now, this has come down a hell of a lot over the last 2 years. We were sitting on an average between 10 and 12%. But you have your good years and your bad years, and it normally runs in cycles of around five years. And Cape Town is sitting between 3.6 and 4%. This is more of an accurate, this is latest figures to March. So Western Cape capital growth, you're looking at around 3.6%, Eastern Cape 4.7%, your average going back to 2.9%. So we're still above the national average. If you look at what's happening in actual sales, now this for me is the most important graph, which is explaining what's happening in the property market. So this is a graph showing all sales and deeds office from October 2018 to September 2019, and there's not going to be much difference between December and March. Those figures are still going to be released, but 5% of all sales that registered in the deeds office across the whole South Africa was over 3 million. 5% was over 3 million rand. 16% of the market was sold between 1.5 and 3 million. 25% in the market from 800 to 1.5, 400 to 800 is another 25%. So if you look at basically 80% of the market is all under 1.5 million. The reason for that, population growth. There's a lot of people are in that growth. They've never owned property. They've been renting. The banks are giving 100% finance. From an investor's point of view, if you buy a property at R1 million, you most likely going to rent it out at 9,000 Rand, which means that the rental is going to cover the bond, and your capital investment is very, very, very low. So this market is going to be the market that is going to be still busy, still active over the next year to 2 years. And our advice for clients is, a lot of clients are wanting to get into the property market. Do they go buy a big house? I think those things, especially in these times, is going to come down. There's going to be a lot more people wanting to downscale, sell bigger houses, move into a smaller lock-up and go. The reason for that, it's lower costs, it's less expensive, it's more sustainable. As soon as you've got a big garden and a pool and everything else, and this is one of the biggest elements that people have got a misperception is, if you own your property and you live in a big house, is that an asset or a liability? Yes, it is an asset because you're getting capital growth, but it's also a liability because it's costing you water rates and taxes. You're living in it. You're not getting any income on it. You might be getting capital growth. So, at the end of the day, it boils down, rather than being in a bigger house, maybe having a small lock-up and go and another investment property that the rental is actually covering the bond. So this is, again, latest inflation. So this gives you the different bands. So to keep it simple for you guys, the low value is yellow. So, and that's exactly the graph that I showed you before. So properties under 700, 800,000, you're getting still growth at around 10%, which is fantastic. Then your more high-end range and your luxury market has taken a massive knock. The main thing for that is obviously with our economy, a lot of foreign buyers weren't looking at South Africa. I think that's going to change now with the rand and dollar. As soon as the coronavirus is calmed down and businesses are getting back to normal, I think there's going to be a massive opportunity for global buyers buying into South Africa, especially Cape Town, because you're getting so much for the rand, number one. Number two, your value of the property and what you're getting a lot of value. So I think that's going to be a positive down the line. But right now, the luxury market is really under major pressure, and it's really common sense. There's just not enough buyers to cover between that 10 and 30 million rand price bracket. So there's a lot more houses that's on the market. There's less flexibility from a buyer. The buyers, it is a buyer's market in all the levels except under 800, 900,000. So if you're a buyer looking, it is a good time to buy because you're able to negotiate better deals. So that really gives a good variation. So, the elements of affordable housing will carry on being a good investment in the future. It's less risky. It's easier to rent out. If you own two properties at 700,000, it's easier to rent out two properties at 700,000 than to rent out one property at 1.5 million and trying to get a rental of 13, 14,000 Rand. So this market is going to carry on doing well and is still very attractive. This just gives you a proper analysis on the luxury property market over the last couple of years. 2016, 2017, 2018, it started declining. 2019, 2020, it's just there's not enough buyers in the market in that luxury segment. So, I get this question, if people can hold on to their properties. Like I said, properties always are long term, and I'd wait for the markets to settle before just selling it at 30 or 40% less than actually worth. Then the view of what the market has done over the last 20 years. This is like a really powerful graph showing you a property at 271,000 in 2000. Every year there has been an increase. You'll have times at like 10, 15, 20%, but that's not normal. You can't have a consistent growth of between 10 and 20%. But if you're actively growing between 5 and 7%, that is sustainable. And that's what the South African property market average has gone to. An average property in South Africa now is priced at around 1.5 million. and we see that is going to remain consistent in those levels. But again, it's going to be between the 700 and million. So now the question is, do you buy property? Do you invest in property? And the one thing I got to say to all our clients is that, diversify is obviously the objective. Whatever you have in property, you have in stocks, you have in offshore, you have in currency. But the bottom line is, this is how quickly things can go wrong in other markets. So if you look at the stock market, this was the Dow Jones, close to 45%. All the other markets, went down to 45%. It is starting to come up, but at the end of the day, I don't think anyone knew that the world would go into such a financial crisis. If you look at the price of oil, and if you look at the Rand exchange and everything else, property is always going to be a good investment over a long term, because people always will, especially in South Africa, they would like to own their own property. If you're investing in the lower price bracket between 700 million, it's less risky because it's easy to rent out. Your rental will cover the bond. And at the end of the day, you're looking at a long-term growth campaign rather than just short gains. This is again another example of clients of ours where we do a lot of the first-time home buyer seminars and going, if you're renting, let's just say you're renting right now at 13,000 Rand a month. What is that? What is that rental that you're losing over a year? And in year one, what are you losing in year 2, year 3, year 4, year 5? And then what is the capital growth on that? So you might think that, let's keep it round numbers. Let's say you're renting at 10,000 a month, and that's a year, it's 120,000 Rand that you've actually lost. But it's not just the 120,000 Rand of the rental. If you had bought, you would have got around 4% capital growth. So you would have lost 40,000 Rand. So now you've actually lost 160,000 Rand in 1 year. If you rent for 5 years, basically you could have bought that property cash or 80% of it cash. So at the end of the day, it boils down to, if you can get into the market, look at a long-term, if you can't buy a bigger property, rather buy something smaller, let a tenant pay the bond off. At least you're in the property ladder, and you know that the market is going to carry on growing, and at least you're in the market. What I see a lot is a lot of first-time home buyers going out, they earning a good salary, and now they go buy a fancy car. If let's say this Range Rover, and I've got nothing against Range Rover, I think they're beautiful cars and everything else. But bottom line, it boils down to, if you had to pay 720,000 Rand for this vehicle, the monthly installment would be around 7,600 a month. After 5 years, what is that car worth? That car is probably worth 350,000 Rand. So instead of buying the fancy car, buy a less fancier car and buy a property where, firstly, you're going to get a bond from the bank. Okay, the banks are still giving 100% bonds even in today's times. Our approval ratio at the moment is the highest it's been for a very long time. On average, every bond that we go through, Better Bond, we've got an approval rate of over 80%. So 80% of all our deals are getting approved. The banks are giving you 100% bonds. And at the end of the day, if you had to buy a property, new developments is always a good way to get into the market, because you're buying now, you might put down a 15,000 Rand deposit, but by the time that property is finished next year, June, July, you would have made your 4% on that property. So let's say it was a R1 million property, you would have made 40,000 Rand on the bigger investment, and you haven't paid out a cent yet, because the bonds only registered, let's say, July of next year. So you've got a full year of growth. You haven't paid any money. You've earned capital growth. Now, once it's registered, you get a tenant in, and at the end of the day, I do think rental prices, as long as you are comfortable and the agents are not giving overinflated rental prices, and that's what we do, is to make sure that if you're buying a property at, let's say, 800,000 Rand, are you going to get a rental of 8,000 Rand? And we can give real data and stats. Cape Town has got one of the best rental payments in South Africa. Our occupancies are still doing really, really well. And there's always going to be someone to rent, someone who's gone through bad time in credit, they can't get a bond at the moment, they'll rent. Or someone who's starting out, maybe wants to find out if they're going to like the place or the area, the suburb that they're staying before they buy. So there's always going to be tenants and there's always going to be a client for you as long as the rental pricing is correct. And one of the biggest elements that we see is 42% of millennials they haven't started to begin for savings. Now, my belief is I don't believe in, sorry if there's any guys that give financial advice. I'm here to give information for our clients to give the right decisions. I don't have a retirement fund. My retirement fund that I'm working on, part of my portfolio is real estate, and on our new developments is to keep those units and to keep it over the long term. We did a project last year called the Eden. We actually launched it 2 years ago. We sold it out. We're busy handing them over right now. Well, not right now with the close down, but over the last 3 months, we've been handing over. Our clients paid 899,000 to 990,000. Those units are worth now 1.2 million. So our clients made basically a 20% capital growth. We didn't promise them that. We said that you would rent it out between 8.5 and 9,000 Rand. It covers our clients' bonds, and they've got a property in maybe year 3, year 4, it would be the time then to increase that and use the bank's money. Then the other big element is from South African, that's for your first-time investors building a portfolio. Then to our clients that have got quite a few properties in their portfolio between commercial, industrial, and residential. Again, to have a balanced portfolio as you grow your portfolio, it is the time to start diversifying. Where let's say you've got 10 properties in Cape Town or South Africa, sell the ones that are not giving you good returns and turn that into something that you can invest overseas. And I say that is because if you've got a diversified portfolio, you've got less risk. And at the end of the day, if you look at the Rand, for example, the Rand Swiss franc, we've got a development in the Swiss Alps, which we launched to South Africa at the beginning of 2019. And the Rand Swiss franc was under 14, was 14.30. It's now sitting at 19.20. And because we've been downgraded, at the end of the day, don't get me wrong, love living in South Africa. I think we have got the best lifestyle. We live in the best city in the world. At the end of the day, is your money working for you? So if you've got a portfolio, you live in South Africa, but having something outside in global currency. Why Swiss franc? Swiss franc is one of the most safest currencies to invest in. It's as the Swiss, they're very neutral. They're not going to go into any wars with anyone. It's subjected, not linked to the euro or the pound. And with Brexit, I think that's going to unwrap over the next 6 months to a year, and version it's stronger than the US dollar. They got the lowest unemployment, one of the lowest unemployments in the world. They number 2 in the world in average salary in the whole world versus the big countries. So it's a very strong economy. So the mission is first-time buyers, if you're wanting to get into the market, start. If you're worrying about renting versus buying, it's still better for you to own a property, but look at from an investment point of view. If you've got bigger portfolios, maybe it's time to look at your portfolio to sell the ones that are not doing well, where you're not doing capital growth, where you're not getting good yields, sell that and invest that into an offshore opportunity. And part of what our team is, we've got a team of 70 agents in Cape Town, in different areas and suburbs. So we're offering free virtual valuations. We don't have to come and view it. Our platforms, and we've been working on these digital platforms for the last 10 years. We do have the opportunity to do virtual valuations on your property to tell you what is your property worth, what is the strategy. For clients that are worried, should they sell now? My advice is if you can hang on, wait for the market to calm down. I think there's a lot of uncertainties with regarding to the virus in South Africa and globally. Hopefully we can hit the worst part and get through this as a country. And I think that one of the biggest elements that we can do, and I think everyone working from home and understanding is, we need to make changes the way that we live, the way that we work, the way we operate, and that boils down into decisions that's going to change the whole world down the line. that is me and the presentation. I'd welcome any questions.